Hey everyone, welcome back to Corporate Decoder, the place where we decode the most important financial documents. Today we're diving deep into Nocera, Incorporated latest -1 filing. Turns out this company is trying to raise some serious cash, but the numbers we found tell a story maybe not everyone wants to hear. Before we jump into the nitty-gritty, if you love getting no-fluff financial breakdowns, make sure you are subscribed. And hey, we have a Discord community popping off with more insights linked in the description below, so come join the discussion. Alright, so Nocera Inc. is filing this big registration statement, basically a formal way of saying they are looking to sell more stock. The main point here is that a selling stockholder wants to sell a massive chunk of shares, up to 45 million. This means the company itself isn't getting all this money, it's the stockholder cashing out. Now let's talk about the actual money, or lack thereof if we're being blunt. Looking at their financial tables for the 3 months ending the 30th of June of 2025, their revenue took a significant nosedive. They reported $3.9 million compared to almost $6.8 million just the previous year. That is a big drop. And for the 6 months ending the 30th of June of 2025, the picture is even dimmer, with revenue around $8.5 million, down from over $11.6 million in 2024. That's a nearly 30% drop in just 6 months. The company mentioned this dip is mainly due to their catering business and fish trading. Their fish trading business saw a drop in volume but a slight increase in selling price, which is a small silver lining but not enough to offset the overall decline. And the catering business, its volume decreased while prices actually went up a bit. So, less product sold, higher prices, still a net loss in revenue overall. Their gross profit tells a similar story for the 3 months ending the 30th of June 2025. It was just over $32,000, a noticeable drop from $45,000 in the same period last year. And for the 6 months, it fell from over $129,000 down to just $83,000. This indicates their costs are getting closer to their sales, squeezing their profit margins. The company is trying to cut costs though. General and administrative expenses are down in both the 3-month and 6-month periods of 2025 compared to 2024. They pointed to lower consulting fees and salary expenses. That is a good sign they are at least trying to manage their spending. But then we hit other income and expenses and things get a bit murky. In 2024, they had notable other income partially from a bank loan and some receivable from selling off Sea Culture, a business they got rid of. However, in 2025 for the same periods, they reported significant other expenses, chalking it up to interest on bank loans, losses on investments, and share of losses from subsidiaries. So while they might be cutting some operating costs, other financial activities are bleeding money. And this all piles up into the bottom line, their net loss. For the 3 months ending the 30th of June of 2025, Nocera reported a net loss of nearly $500,000. And looking at the 6-month period, that loss balloons to over $739,000. This continues a trend from 2024 where they also posted significant losses. Now, this is a big one. The company took massive impairment charges on goodwill. In 2023, it was over $2.2 million, and in 2024, after restating some numbers, it was over $1.1 million. They say this is because they lost a major customer and had to reassess their financial outlook for their makes-in business. Basically, they overpaid for this business initially, and now they have to admit it lost a lot of its value. This is a huge warning sign about their past acquisition strategies. The risk section is always a goldmine, and Nocera does not disappoint. They openly admit there is substantial doubt of our ability to continue as a going concern. That is company speak for, we might go bankrupt. They've incurred net losses since they started, have an accumulated deficit of over $21 million, and their auditors have expressed concern. They need constant financing to keep the lights on, and if they can't get it, well, it's lights out. They are also heavily dependent on their key executive officers, like their CEO Andy Jin. Losing him or other key people could be devastating. They even admit they don't have any business liability or litigation insurance in Taiwan, which is pretty wild. Any major lawsuit there could be financially crippling. Then there is the whole variable interest entity or VI situation. Because of Taiwanese laws limiting foreign ownership in certain businesses, they operate through these VIs. They essentially have contracts giving them control and economic benefits, but not direct ownership. They acknowledge that if these contract partners don't hold up their end of the deal, Nocera could lose control of these businesses and assets. That is a pretty precarious business model. Looking at their stock, it is pretty volatile. They had to regain compliance with Nasdaq's minimum bid price requirement after their stock dropped below $1. While they did get back into compliance, the risk of delisting hangs over them. And with the company still facing significant losses and needing constant funding, it is hard to see a clear path to sustainable growth right now. Looking at executive compensation, it is a mixed bag. Some executives have seen their salaries increase significantly, tied also to hitting certain company performance milestones. For example, Andy Jin's salary can jump from $240,000 up to $600,000 if the company hits specific acquisition or funding targets, which seems optimistic given the current financial state. They also issued a generous amount of stock to some executives, which can be a good way to align interests, but obviously dilutes existing shareholders. In terms of related party dealings, there aren't any massive obvious red flags in terms of dollar amounts. However, they owe money to entities controlled by their former secretary and director, and to the estate of their former CEO. They are evaluating how to settle these debts, which adds another layer of complexity to their financial situation. When we look at who owns a big chunk of the company, Yin Chi-chung, a former CEO is way out in front with over 32% of the shares. Other major players include Han Chi, Shi, and Min. Huai Cheng-lu, likely connected to that former CEO and part of the estate mentioned earlier. This concentration of ownership can sometimes be a good thing if they are all pulling in the same direction, or a risk if their interests diverge. They have authorized a massive amount of common stock, way more than what is currently outstanding. This means they have a lot of room to issue more shares in the future, which sounds good for flexibility but is also a big dilutive risk for current shareholders. They also have preferred stock, Series B, which ranks higher than common stock and pays a hefty 9% dividend. This preferred stock can be converted into common stock, but only up to a certain percentage to avoid them owning too much. This S-1 filing is largely about registering shares from a private placement that happened in August 2025, involving the Series B preferred stock. They sold about $3.15 million worth of it initially, and can sell another 10,000 shares after that. They got these funds for working capital and general corporate purposes, which is typical, but it does highlight their ongoing need for cash. And who is this big investor selling all those shares? AW Digital Asset Opportunities, the 8 LLC. There is a whole disclosure about who owns them, but the key takeaway is they are looking to unload a massive amount of stock on the market. The plan for selling these shares is pretty standard. They'll use brokers, trade on exchanges, or do private deals. They are essentially giving the selling stockholder a way to cash out of their investment. Since the company isn't getting any proceeds from these sales, it is purely a secondary offering. Looking at the big picture, Nocera is in a really tough spot. Their core business of aquaculture systems and fish trading is facing significant revenue declines. The company openly admits it might not be a going concern, which is the most serious warning sign possible. They have a history of goodwill impairment showing they overpaid for acquisitions, and they rely heavily on contracts for control of some of their operations, which is inherently risky. While they are trying to cut costs and have brought in new management and directors, the financial numbers are stark. The fact that they need constant financing to survive, and are looking to sell off a huge block of shares, suggests they are in a period of significant financial strain. The story here is one of survival, not rapid growth. They need to find a way to turn around these declining revenues and manage their debts effectively. Otherwise, the risks they themselves highlight could very well come to pass. What do you all think about Nocera's situation? Do you see a path to recovery, or is this an investment to avoid? Let me know your thoughts in the comments below. If you found this deep dive valuable, hitting that like button really helps us out, and be sure to subscribe for more corporate dissections. And seriously, check out the Discord server linked in the description. The conversations there are fantastic. Thanks for watching, and we'll see you in the next one.